Scott Schweiger with Burnt CPA. Welcome back for episode 12 of Tuesday Tax Tips. With just under 2 weeks until the filing deadline, just a friendly reminder that there's still plenty of time to file last minute. Anyway, as I'm thinking about how it would take an act of God to get all of our work done around here and filed by the deadline with no extensions, I'm reminded about personal casualty losses. That's this week's tax tip. There's no more deduction for personal casualty losses on your individual tax return. So, what is a personal casualty loss? So remember the insane flooding we had around Wisconsin last year? Damage done by this is a perfect example of a casualty loss. If your personal property had damage and needed restoration, the cost of that is your casualty loss. There's a lot of rules defining what actually constitutes a casualty loss, but in short, the loss is a result of a sudden and unusual event, or as often said, an act of God. Fires, storms, floods, clear examples. There are caveats that limit the amount you're able to take for your casualty loss. I know, there's always something lurking in the shadow with those rules, right? So, there's no more personal casualty loss unless, another caveat there, unless you're in a federally declared disaster area, which thankfully Wisconsin was. Obviously, how this will affect you will depend on your particular set of circumstances. Like if you had flood damage, or a flood at all, or if you were in a federally declared disaster area. So if you have specific questions, please reach out to your tax advisor. Feel free to contact me if you'd like. Thanks for watching. I hope you join me next week for my final installment of Tuesday Tax Tips.